Hey everybody, welcome to another edition of Zach's Live Trader. I'm Dave Bartosiak. I feel like we were just here, because we were just here, talking about CRM, Salesforce.com. But now we get to talk shoes. Man, do I love talking shoes. We're gonna be like a girl, like a chick. I love talking about shoes, I can't help it. Today we're gonna be talking about Foot Locker, ticker FL. Obviously, they sell shoes and other athletic apparel through their locations throughout the U.S., brick and mortar, plus their online presence is pretty serious too. So they are definitely tied to the health of the U.S. consumer, which we have seen still kind of, hanging in there, doing all right. And in this newfound wave of optimism that we've seen over the course of the last week, they've benefited a little bit too. So we do have that. But as I've seen some other retailers, they haven't done that fantastic over the course of this earnings season. And I'm wondering if that softness is going to show up at all in their earnings report that's due out here. I believe they're also tomorrow after the close. I'll confirm that while I'm going through here, but I'm pretty sure they are. So, as always, what we're going to do is take a look at the price consensus EPS surprise chart here on Zacks.com. A ton of information that you can glean from that. Then we'll look at the detailed estimates page and dig into the options, this time using my new friend, barchart.com. Any comments, concerns, questions, if you want to know what this whole Zach's Live Trader thing is about, where you get another extra premium stream that you can't get anywhere else. It's going to be Canadian Solar this week. That's some good stuff. And then a trade review that we go over the trades that we've done throughout the course of the week and suggestions of which videos you guys want to see next week, because basically you guys tell me what to do. Live Trader at Zacks.com. Go ahead and shoot those over, especially the suggestions of what to do next week. Usually when you send them in, I don't really reply back unless you're asking me a question. But when you send in your recommendations, I kind of take them all and look at what everybody's asking for, and I try and just be the most popular guy and shoot those out. Unless, of course, the options trades you're looking for just don't exist, right? Because sometimes we have a stock that seems like it's popular, but then I look at the options chain, and it's just slim pickings over there. So not too much going on. All right. Live Trader at Zacks.com, guys. Live Trader at Zacks.com. All right, let's jump into the price consensus and EPS surprise chart here on Zacks.com. As always, the black line represents the price, which corresponds to the right y-axis. Then you have triangles. No, they're arrows. I suppose these are arrows. The green arrows are earnings beats. The red arrows are earnings misses. You can see a little string of win. Here's a win, loss, win, 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 win. So that little guy, I wouldn't worry about that little guy. And then you start going back. 2013 was kind of rough, trudging through the mud. Anyway, these multicolored lines here represent the evolution of our Zacks consensus estimate. You can see some real bullish behavior here. Foot Locker starts low and it just gets bullish. Then we have growth. Starts low and then it gets bullish. Growth, bullish, growth. I mean, that's why the stock's gone from $20 to $76 from 2012 through the middle of, September of 2015. But what's happened since? Things are getting choppy, right? A pullback to this $50 level, followed by a rally that sort of filled that gap, and we're butting up close to the highs again. While these estimates have actually ticked up a little bit. Surprising. A little tick up in the estimates here as of late. Of course, we're going to see that a little bit more on our next page, which is the detailed estimates page here, which didn't load yet. So let's go back to the pricing consensus real quick. So again, as this sort of gap down here is kind of other earnings reports out and things outside of the realm of Foot Locker, really. Some of the other retailers believing that things were going to be so good, and some of the actual apparel companies saying there was going to be a slowdown. And if you look at the EPS for Foot Locker, yeah, it did tick down a little bit, but the rebound here has got us right back to the levels that we've seen at the end of 2015. So the bullish behavior, I think, well, heck, in the short term is warranted, it looks like here. All right, now let's look at our detailed estimates page. Zacks ranked number 2 by value score of A, growth score of A, momentum B for a VGM score of A. They're going to report before the market opens on the 18th. So that's how it is. It's going to be Friday before the market opens is when these guys are going to talk turkey. So again, you're going to have a couple of days to look at this one. The industry in the top 38% of the industry. Now, let's take a look at what the analysts have done. Over the last week, you got 2 analysts that have increased their estimates for the current quarter. That's a very good sign, actually. Next quarter's number, 1 analyst has increased their number. The current year, 2 analysts have increased, and 4 have followed suit over the last 7 days. So that's pretty bullish. I'm still trying to figure out why this thing's a 2. Why isn't this a 1? Let's see here. Most accurate estimate, which is really the most recent estimates. So most recent estimates have just kind of ticked up a little bit. So maybe that's why the actual magnitude hasn't been. Here it is. This is what makes sense now. Okay. So if you look at the current quarter numbers, we were at $1.13 90 days ago, down to $1.10. Now it's gone to $1.11. $1.32, pretty much solid, except for 60 days ago. Then back to $1.32 for next quarter. Current year numbers from 471 to 476 down to 475. Still good, moving in the right direction. Next year's number, my friend, from 516 to 525. I might have to give the audio guy a different signal on this one. Foot Locker. All right, now let's look at the options on this one, right? Because we got a lot of stuff going good here on shares of Foot Locker. You got those positive earnings estimate revisions here ticking to the upside. And recently, it's gotten a little bit more aggressive, which is actually a good thing. Now, the retailers have been troubled, though. Not all of them have done as well as Foot Locker has, bouncing off of the bottom here. So was that just the buying opportunity of the century with Foot Locker down at $54 a few months ago, and everybody just kind of ignored it? Could that have happened? Now, what are we going to have happen here? We have lots of optimism surrounding the early stages of the Trump presidency. Of course, I know, I'm not going to get political, guys. Take it easy. There's optimism. The market says so, okay? The market says there is optimism. I'm listening to the market right now. That's it. I'm offering no political, just so you know. Optimism. So hopefully that can roll on through towards the retailers. I did see wage growth, 3.9% year over year in the U.S. That was the number that got announced here. So I think people are going to be itching a little bit this holiday season to spend a few buckaroos. So you got to, there's all that, right? I almost went into a Foot Locker actually yesterday, but see, I used to work at Finish Line in high school, so I got this whole loyalty. I just can't do it. I'm sorry. It's a great stock, great company. I can't shop at Foot Locker. Can't do it. Something about the referees. I don't get along with referees. Anyway, so let's take a look at the options chain here. On barchart.com is where I pulled this one up because, frankly, the data has been a lot more reliable here based off the one day that I've used it. Stock's basically at $70. Okay, so I want to use $70 sort of as my anchor here to make all my calculations. Now, here we go, 70 bucks. Now, the at the money call, the $70 call is 210, and the at the money put is 255. So if you add the 210 plus the 255, you get $4.65. Is essentially the move that shares of Foot Locker are pricing in here. $4.65. Divide that by the stock price. That's 70 bucks. That's a 6.6% return here. 6.6% return on shares of, or 6% implied volatility. I'm sorry, guys. 6.6% implied volatility on earnings here. So that's essentially what the options market is pricing in terms of a move for Foot Locker. So on a $70 stock, $4.65, obviously to the upside is $74.65. Let me get a little bit more specific on this though, because A, I got my handy dandy calculator up, and B, we have pretty much a real-time quote here from Bats. So 69.90, this will be sort of our anchor for the stock, although this will move. So add the 465 and you see 74.55. So strike price 74.50, right? It's okay to round down a nickel. You know, this is not brain surgery here, okay? So there's that. And then 69.9 minus the 465 puts you at 65.25, so kind of right in between the 65.50 if they have one. So we just look at the 65, right? Okay, now I'm gonna blow this up to not just the near the money options action, but we'll go all of them so that we can see this. All right. Now again, this is the contract that's going to expire the day after or the day of earnings, okay? Now, with a stock like Foot Locker, I think I'm more comfortable catching a little bit of this post-earnings drift that takes place. And what I mean by that is if a stock does well and earnings do well, then investors tend to buy the stock and ease their way into it over time. It's not just a one-day sort of reaction. So I'm going to open this up from the November expiration, and let's look at the December expiration, because this way we get a little bit of holiday action inside of this too. We're going to let that pull up on the StratoView side by side, and you see this open interest, these open interest numbers just aren't all that fantastic right now, right? 500 contracts, 200 contracts, 1,300. I don't know. I guess there's enough liquidity there, right? You definitely want to see a few hundred. Let's just see if it gets better out into January. And this is sort of what I do sometimes, right? I'll look out, check a few months, see where the action is, where's their liquidity, where's their open interest, and there we go. A lot more open interest in the January contract, right? Not just on the call side, where we see hundreds, thousands being traded here, or of open interest here, but also on the put side. Now, again, when we talk about these options plays, it's not always a very short-term, super myopic trade that I want to put on, okay? Because I want to give them a little bit of time sometimes to move out, and I try to find where the liquidity is too. Then, if you kind of like a stock or dislike a stock over time, you want the market to sort of work itself out, and you still take sort of a directional bias on it and want it to go in a certain way, then you can buy a little bit of more time value inside of these. But rather than just buy the time value and watch it erode in your face, what you can do is you put on a put spread or a call spread. So while you're buying that time value, you're simultaneously selling that time value further out, and that way it doesn't work itself against you. Now, what it does is it limits the volatility on the trade too. The spread is not going to go directly to your number right away, given that time value that's in there, right? Because that still has to erode. So these trades take a little bit more patience, but can still work out, you know, either way. So, and then if it runs against you, since you have time value, it doesn't hurt as much. So while I talk about these trades and I say, oh, hey, this call spread, you could be up 150% or whatever it might be, we'll put it together. In order for that to happen, you would have to pretty much hold it through to expiration, which is in January, which right now sounds like a long way away, but it's really not, which is the frightening part. January is right around the corner. I'm in Chicago. I don't like January. I don't know where you guys are, but it's no bueno for me. It's no bueno for me. All right, so let's dig in here on this options chain. Now, this expiration is January 20th, 2017, which feels so far away, but it's only 2 months. It's only 2 months away. So if I was bullish on this, let's look at this call spread. So if I'm long the $70 call, and I thought that this market was essentially pricing in a 6% move or a $4.65 move, 74.50 is the top end of that. So if I look at this 75 call out to January, assuming I'm going to catch some of that post-earnings drift, right? I mean, this is what I'm banking on or betting on a stock like this. So what does this look like? So if I'm long the $70 call, look at the bid between here. 310, 340, right? The bid in the ask, so 325 is the middle of that. So long the 70 for 325. And then 70 for 325, okay. And then if I'm short the $75 call, between 120 and 145. Let's just say 130, right? Because that was the last one it traded. 130. Because I don't want to do 132.50. It's just forget it. Let's do 130. Okay. So subtract the 130. So this is going to cost $1.95 to put on. Now my upside is going to be the difference in the strike prices, which is $5, minus the $1.95 that I have here, right? So that's $3.05 of potential upside on this trade. Now, what's got to happen in order for this to work out is that shares of Foot Locker would have to trade above $75. Okay, so yes, that's a pretty far way out, but remember what everything is pricing in here, right? It's all, the market's already pricing in a 6.6% move, so we're essentially hoping that that works itself out on this options trade. Now, I would lose that entire $1.95 if shares of Foot Locker close below $70 at expiration on January 20th, 2017. So you got a couple months, hoping to catch some post-earnings drift, hoping to catch a nice holiday season. So this is a little further out of a trade. And I've been mixing these in a little bit because people have asked me for things that are just a little bit further out, not necessarily the very myopic kind of 1 week. So today was an interesting day because I gave you a one-day trade and I'm giving you like a 2-month trade. So I'm just here to keep you on your toes. Anyway, that's my bullish trade. Now let's go ahead and put together a bearish trade here. If you really think that maybe, you know, the options market is right, but this move is going to be to the downside rather than the upside, and that the holiday season is going to be a little bit more disappointing than everybody first thought. So we could do it the same way. Let's go to the put side, though, and we can put on a put spread. We can be long a put spread here. Now, remember these values. So the downside, essentially $65 is the bottom end of the range, right? On the downside. So 65. And then this at the money put is still the 70 bucks. So if I was going to be bearish here and I wanted to catch some of this post earnings drift, this is what I would be looking at right now. Is I would be looking at going long the $70 call. I'm sorry. This is a put. Long the $70 put. I want to clarify that. Long the $70 put. We see the midpoints here. This makes my life so much easier. Midpoint of 380 and 185. This should look awful familiar, folks. Here we go. So we sell you buy the $70 put. It's going to cost me $380 to buy that. I could sell the $65 put for $1.85. Does that number look familiar? Sometimes it works out that way. So this is pretty much the same risk parameters. If you go long the 70 put, short 75 put simultaneously, another fancy way of saying this is a bear put spread, or you're long a bear put spread or long a put spread, 70-75 for a net debit of $1.95. Now the amount of money that you can make here is $3.05, which is the difference in the this is a 70-65 put spread. Long the 70 put, short the 65 put. Okay, just to clarify. So it is a net debit of $1.95 with $3.05 of upside potential. Now, what has to happen in order for this to max itself out here is you would have to see shares of Foot Locker close at expiration below $65 per share. You're going to lose your money. You're going to lose at $1.95 if shares of Foot Locker trade above $70 at expiration. Okay, so you'd lose it all. So that's kind of where you're at on this. So this is definitely another directional bias. You want to see this move in one way or another. Now, what's going to happen is on Friday, after the earnings, the stock is going to move. And these spreads that we're talking about are going to move too. But they're not going to move as quickly as a very short-term spread would. So the good news is, even if it goes terribly wrong in either direction, you'll be able to sell it and still save face. That's the good news. The bad news is it's going to work against your patience if it goes your way, okay? So definitely something you got to manage your emotions a little bit. I'm going to talk about this in the video that I do, in the review video. I probably won't talk about it tomorrow, though, because they're not going to report until the morning on Friday. So what's the use of me reporting on Thursday before anything even happens? Doesn't make any sense. So I'll circle back with this in next week's video, because we got plenty to talk about tomorrow anyway. So there's that. Don't forget that, okay? So again, guys, do I want to be bullish or bearish on Foot Locker heading into this earnings report here? So I originally thought I was going to be bearish on Foot Locker because of what I'd seen in terms of a lot of the retailers and what I've heard from Under Armour and what I've heard from Nike and what I've seen their stocks do. But as I was looking at the price consensus and EPS to price chart, I was surprised to see that the EPS didn't creep down as the stock crept down. And I was also surprised to see that growth number still there. But what tipped me over the edge was seeing in the last week an analyst came out and increased their earnings estimate. You better be darn sure of your EPS making a move if you're going to report you're going to change your mind so close to earnings. Let's take a look at how you can see this. Under the detailed estimates page at Zacks, you see this agreement page, section, up last 7 days. So 2 analysts over the last 7 days have come out and said, nope, this guy's going to do better. 1 analyst did that for the next quarter, 2 for the current year, 4 for next year. So that's optimism further out. That's a nice way of saying these guys are very bullish on the guidance for next quarter. And a lot of these stocks trade much more with the guidance for next quarter than they do with what's happening this quarter. The stock market's always looking forward. These stocks are always looking forward along with these analysts. So when I see that and it's kind of more towards one end than the other, it's more, next year is going to be awesome. I like that. And I like that hopium, and especially this time of year and with the election that just happened, there's a lot of hopefulness for change and whatever and what have you. Lots of hope and change going on out here. So again, guys, remember, I'm looking for suggestions on what we're going to do next week, because tomorrow we got a couple of action-packed shows for you too. But livetrader@zacks.com, go ahead and shoot me those emails so we can talk about maybe the hot stock heading into next week. So again, livetrader@zacks.com. Come and get hooked up. Get your 14-day free trial to Zacks Live Trader. I'll be back here. I don't think it's going to be 1 o'clock. I think I got to talk to the guys back there. We might have to do it sooner. We got a lot going on tomorrow. So I'll circle back with you. Make sure you're on my mailing list, and I'll let you know what our feeds are going to be tomorrow. So thanks so much for hanging out. I'll see you then.